Folks, welcome to Paisa Vaisa. I'm your host Anupam Gupta, B50 on Twitter, and this is a really special episode because for the first time I have an education loan provider on my podcast. My guest is Raheel Shah, co-founder and chief business officer at Eduvanz. Raheel, welcome to Paisa Vaisa. I'm really thrilled to have you. Thank you so much for doing this for our listeners.
Thank you, Anupam. Thank you for having me. Absolute
Great,
pleasure.
great. So let's just start with what Eduvanz does. Specifically, which segments of education does it provide loans for?
Sure. So, Eduvanz Finance is an NBFC, and very simply put, we are a fintech that focuses on education. And in education, the philosophy is very simple: from play school to PhD. Any student, any learner who wants to get a skill, who wants to get aligned on education, uh, it is our vision that everyone should be a part of that person's consideration set. So that's where we are focused on, and that's the idea here. We noticed that there isn't a dedicated player who looks at education and tries to fulfill the very nuanced requirements of the segment. So that's where we are.
Very interesting, right? It's the first time that I've had, someone who gives education loans. And that's what I really find interesting because I need to know, I want to understand how exactly do education loans work? What is the collateral, if any? Stuff like interest rates, who all are eligible, how do I repay? If you can just take us through the basic mechanics of an education loan, because the first time that I'm trying to understand, and what makes it even more interesting is what you said, right? That it's from play school to PhD. So just walk us through some very basic aspects of an education loan out here.
Happy to do that. So, Anupam, the traditional way of how education loans work has been very difficult for the young borrowers. And it has always been considered that if you want to go abroad, or if you want to go and get your MBA, your master's, or your engineering, or medical, or any of these programs, the traditional conventional method that works here is you walk into your bank, you go to your nearest Sharma ji, who is your, SBI manager. You take your son, your daughter along, and you say, "Sir, loan karana hai." And then there is a long drawn, tortuous process, maybe a month. You have to do your KYC. You have to then get your property mortgaged. You have to keep your FD maybe as a collateral, and against that, you typically get a 4 year or a 5 year tenure where the student or the person is studying, and the person gets what we call as a moratorium. Now, that has been the conventional method. It still continues even to this day when one is looking at loans about 20 lakhs. So, your typical, going abroad, your IIM degrees, your medical degrees, they continue to follow that. We looked at this and we saw the data and we did a lot of surveys, and we found that there exists a large segment of the population that doesn't have or doesn't really need to get into that kind of a segment. They are more under the 10, 15 lakh segment. This could be your nearby BCom, it could be the local MBA college, and that exists far more. And that's the segment that we are catering to. The idea is that a student needs to be given a decision very quickly. You want to reduce the anxiety of the parents, and at the same time you want to make a process which is as risk free, or there is some element of risk, no doubt, but as convenient and as friction free as possible, so that this segment grows. So that's where it works. So to summarize, the current system today is very dependent upon the future potential of the kid. It depends on the collateral, the present collateral. It depends on a long run subjective process, and it often brings in a very high degree of opacity to the process. So that's where the current process is, and where Eduance is trying to just solve for that gap. Can we make it easier? Can we make it simpler? Can we make it faster? Can we make it more affordable? So that's where we come in.
Great. Okay, great, Rahil. So, for our listeners and even for myself, actually, just to understand how education loans work, right? Because I've done a lot of episodes with people who talk about loan against securities, credit cards, home loan, auto loan, gold loan. So, we understand in some cases there is collateral, in some cases there is no collateral. how do education loans work in that way?
Sure.
I mean, collaterals, interest rate, stuff like that.
Sure. So, because I myself have been a big, a listener of Paisa Vaisa, so I
Thank you.
understand that the audience is pretty familiar with a lot of concepts. So, do let me know if I get little more technical, but to put it as simply as possible, a parent walks into a bank and says that this is my property. It is worth, say, 10 lakhs or worth 15 lakhs, and I need a loan for the next 4 years so that
Yeah.
my child is able to take a loan for 25, 30 lakhs. Now that segment continues to flourish, that segment continues to be in that. The segment that Eduvanz, however, is in the sub 15 lakh range. And let me give you live examples of what I mean. You have a student who's in the final year of their MBA program, and they realize that they need that extra edge, they need that extra finishing touch, they need that extra skill set. So they hop, and they know that the school is not going to give, so what they do, they take up a program which is available online. And it could be anything. It could be something on, say, leadership or finance. It could be a CFA certificate. It could be a coding certificate. It could be any of these different. Or it could, you're looking at a parent who wants his child to get into a Ivy League or one of those top schools. Now in these concepts, what we have realized is that these students or these parents or this target segment typically does not need to bother with a very high kind of collateral or any of that. For them, it's very simple. It's short term. It's income generating, if one can say, in a way that if I'm investing money in my child's skill set, the expectation is post 6 months, 1 month after doing that small course, my son or child, my daughter will have a skill set that can get them a better job. So that's the segment we are really catering to. Uh, I like to call it as eduployment, education relay, that leads to a better employment. So today, 70-75% of our population are today working professionals who want to upskill themselves, who feel that where they are and where they can be is a gap that can very easily be fulfilled by short-term programs, skilling programs, institutes that can quickly you come in, you learn a skill, and you future proof your career. So that's where we are coming, and that's the trend that we are seeing. It's very, very different from your typical 5-year program where you're sending a child abroad or you're doing your masters or a medical program. It's far different. It's really, ours is immediate enhancement in your employment, or it could be something like immediate gratification, that you want your daughter to go to a good school and you don't really want to be pay upfront all the fees. Can you create a Netflix subscription kind of a model and make it simple? So that's where we
Hmm.
are really coming from. And
Very
we've
interesting.
been, yeah.
I, you know, I want to go back to what you had said at the start, which is where you spoke about the opportunity for Eduvance. Just for our listeners to understand that part, where do you think the system is broken, and where did you decide to enter this? I would, whether you call it a niche segment or whether you call it a small segment, because it's very different, right? This is not, you don't have, you're giving a loan to a person whose income generation ability is yet to be proven. You don't know how he's going to repay, if at all he's going to repay. And this is a market which is dominated completely by banks and NBFCs. And you wouldn't find your average fintech startup entering into the segment now. It's only in the last, I think, couple of years that you've got, startups coming in here. So where do you think the system is broken and you saw an opportunity for Eduvance to come in?
So the system is today broken, Anupam, is because we are not really valuing a person, a good borrower, a potentially good borrower who is going to a good institute. That combination is not really being valued today. If me and you were walking into a bank and we wanted a loan, right, they will look at our the typical loan process. They look at income, they look at 20 other factors. And I'm sure uh, the the esteemed guests who have come before us, whom you have interviewed, they all say that, I'm a fintech, I have my secret sauce, I have my algorithms, right? No different here. The only thing that we did very different, which is, which when we started, we were lucky enough to, find that opportunity, was that we realized that the combination of a good institute and a good borrower that leads to an enhancement of income can be valued with a lower risk and a higher reward. And that's where we put in our systems, that's where we developed our DNA, that's where we developed our processes, where the logic is that any person who's looking for a loan for education, for skilling, for school, let's ensure that A, they get transparency, B, they get really great affordable rates, which is why 75% of our book is, on the concept of zero cost loans, zero cost EMIs. And let's try to give him, a non-collateral, very smooth process, because the money is eventually going to the institute. The end use is very clearly defined. So we have been able to crack this fairly well. We've been able to, are we there yet? No, obviously the growth for, the headroom for growth is there, but the opportunity which we saw, which no one was catering to put it in a very simple terms, was to see what, bigger brands, bigger leaders like say Bajaj Finance was doing in consumer durables, and push it and do that in education in a way. So we've been very lucky over there. We've been able to sustain that, build that over the last 3 to 4 years, and today, at least in some segments, we at least are considered, as one of the brands that one should look at. So that's the aim today.
Excellent. So let's just wrap up this first part with that,
Sure.
kind of a pie chart what you just spoke about, which are the segments that we operate in, just so that, who knows, our listeners might
Yeah.
want an education loan in the area that you are in and they might just reach out to you. So which are the
Sure.
which are the segments or the categories that you service?
Right. So Anupam, the idea that we've built is essentially, the reason why I say play school to PhD is essentially where I come across to say Paisa Vaisa consumers or Paisa Vaisa audience, is that if you're a parent, you want your child, going to a better school or the best school possible, can we help you with the school fees over there? Right. It could mean that, maybe you have a teenage kid who is preparing for their coaching classes and IITs and all these entrance exams. We come in there. It could be that, your maybe it could be that you yourself, a lot of the audience, I'm assuming, are in the range of say 20 to 30 years or 30 years, that segment. They are looking to upskill themselves, trying to, maybe a CFA certificate, maybe a SAP certificate, maybe the next best thing from say upgrad and great learning, coding courses, or just that little edge which pushes them and gets them the over the rest of the contemporaries. So yeah, so that's the segment and the coverage that one can really look at, right from school to entrance to say your typical programs like your conventional degree programs which are under 25, under 20, 15, 20 lakhs, your local programs, and your deployment programs that give you that edge. So
Sure.
those are the 3 to 4 broad, segments. And over the last 1 year, what we've seen is we've also got a lot of requests coming in for, laptops. That's something that completely,
Wow.
helped us. That
Loan
a
for
lot of parents are
laptops.
saying, yeah, loans for laptops, right? Again,
Nice.
so a parent says, look, my child is, enrolled with White Hat and with Byju's. Can you give me a tablet as well? So we are now doing those things as well. So again, essentially helping our audiences with all the financial access that they need to make their lives easier. So we're solving for that problem as well.
Great, folks. Don't go anywhere. We'll be right back. On the other side of this break, we're going to talk about specific products that Eduvanz has, like a study now, pay later scheme. On this episode of Paisa Vaisa, my guest, Raheel Shah, co-founder and chief business officer at Eduvanz. Don't go anywhere. We'll be right back. And welcome back to this episode of Paisa Vaisa. My guest, Raheel Shah, co-founder and chief business officer at Eduvanz. On the first part of this episode, we spoke about what Eduvanz does, what it specializes in, and where all the education loan market is broken and how Eduvanz positions itself everywhere, from play school to PhD, like Raheel said. Okay, Raheel, let's talk about specific products now. I mean, we live in an age of buy now, pay later. It's there on Amazon. It's there, low, no cost EMIs everywhere. So why not education? So talk to us about study now, pay later. What a
Sure.
concept, man.
Yeah. Perfect. So Anupam, as you rightly said, we live in an age of, consume now, pay later kind of environment. And essentially because our loans are focused on enhancing a person's ability to earn better in the future, we found that this concept works really very well. Fairly simple. A person walks in, says, "Hey, I want to do this program, but I really can't afford to pay the full fees up front." That's where we come in and we say, "Look, we'll pay the fees on your behalf. Nothing to worry. But this is how it's going to be. You're going to give us, smaller EMIs spread over a longer tenure. Sometimes the loan duration will be much longer than the course duration itself." They enjoy that. They really like that flexibility. They like that convenience. We've been able to do that. To give you a live example would be, now the government of India has sanctioned 37 universities to start online degrees programs. So we're working with all these guys and we're saying, look, it's going to be a degree program and it's not going to be as expensive. It's probably going to be in the range of say 1 to 3 lakhs. Can we help finance that? And we've got a tremendous response from our university partners. They're saying, absolutely, we really want this because it's easier to enable a parent to pay 5,000 rupees a month than asking that same parent to pay 60,000 rupees in one shot, right? And that's where we're coming in. So it comes very simple, very straightforward. Obviously we do our due diligence on these universities. That's a part of our dynamic. That's a part of how we assess our risk. We look at, is the fit, is the combination happening correctly? So for example, if an engineer wants to now get into acting school, we may not consider that as well as say a computer scientist trying to become a data analyst, right? Things like that. So all these various combinations over the past 5 years, we've given over 35,000 loans. So over the past few years, we've gained that kind of insight to be able to give a very smooth, friction-free experience. And zero cost EMIs absolutely work. It works for the college, it works for our partners because it's a part of the cost of acquisition. It's anyway today, they have budgeted for it, and it enables us to substitute the interest otherwise which the child would have to bear, the parent would have to bear. So essentially we've been able to create an ecosystem which works. And now the idea is how quickly can we scale up, how quickly can we build on this. So that's where here we are. So hopefully a lot of your listeners can also reach out to us.
Yeah, I'm planning to with this next question at least because I wanted to construct a live case out here. Let's look at
Yeah.
a family that wants to send one kid. Let's just stick with one kid to reasonably good ICSE or CBSE private school. Okay, I'm not even
Correct.
talking about those fancy IB schools and IG schools. Let's not. So let's just stick to what I would assume is more um, average. So, and let's say that this is, I don't know, fifth, sixth, seventh, eighth, where the fees are slightly on the higher side as compared to the earlier years. So my guess is that depending on which city or which school you are, a reasonably good private ICSE, CBSE education could be anywhere from, I don't know, 50,000 to a lakh. Help me out here. Okay.
Right. You're right. You're pretty much
So,
right. It's
I mean, yeah, I mean, metro cities would obviously be higher, but if you're in a
higher.
smaller, a tier one or a tier two city, might be lesser than that. So let's say that, you have a family that's one kid wants to get into anywhere from 6 to 10 standard, has about, let's put an average of 75,000, like 50,000 plus 1 lakh divided by 2. Let's
Correct.
put a loan size of 75,000.
Right.
Walk us through this. Like first,
Very simply put, it's and this is a very classic example. So for the way it simply works is very straightforward. We first partner with the school. We want to ensure that the school is legit so that anyone who's coming, they trust that Eduvanz has at least done the due diligence. It's vetted at least. So we first do our due diligence. We partner with the school, and typically we also integrate with the school's ERP. So it's very straightforward. A parent gets on a message today. A lot of this is automated. A parent gets a message, you need to pay. say 75,000 rupees as your fees, and this is, this is the end date, and they recommend Eduvanz. By the way, we have a partner who can help you. What we do is we typically take that 75,000 and we say, hey, look, it's your school is going to be for around for 10 months, right? So 75,000 divided by 10 months, 7,500, right? So the parent gets a loan agreement from us, 7,500 EMI spread over 10 months every month. And that's about it. The idea is that the parent invests that 10, 15 minutes with us. We finish the loan process. Everything is done digitally. Everything is done paper free. Everything is done online. So it's a completely smooth process. It's as simple as having this Zoom conversation with you. So that's the idea. Now the parent rest assured that they are paying 7,500 every month, and the back end, what we do with the school is we go and say, look, it's 75,000. We'll pay you upfront a certain amount minus a certain commission or a certain interest which the school is ready to bear, and we pay the money to the school upfront. So we are paying upfront to the school so that the child can study now and the parent can pay later. So that's how the
Okay.
entire ecosystem works.
Okay. And
And
I'm guessing that
yeah,
if you take a loan to value of say 4 times, which is what it is for home loans, you'd be looking at an income for the parent to be what, 3 lakhs a year, 5 lakhs a year, somewhere around
not
that.
even that. So what we are looking at is 7,500 tier one city. Here, the reason why we chose education also is that education, unlike a lot of other categories, holds very special cultural significance in our society. A lot of parents, I'm sure, would not compromise on their own personal health. They will sacrifice their own comforts, but they will not sacrifice on the child's
Mm.
education. So what we've seen is it's not even that expensive. It's pretty easy. A parent could very easily afford it. We've seen often that the parents have that kind of income. We've seen that parents don't even need to earn that much. So typically our what we look at, what we've seen over the years, is a parent should be, at best, even if the parent is earning say a lakh rupees, which is pretty low if you
Mm.
consider it. Someone who's earning 15, 18,000 or something, that's fine, because we have the confidence from the school as well that reasonable risk mitigants are put in place. So yeah,
Yeah.
we are able to cater that as well.
Okay. And just, am I, what kind of interest rates can I expect out here? Just as a ballpark number. It could.
Zero. That's the best part of
Acha.
it, because
Okay.
as we said, we work with the school, and the school is
Understood.
ready to bear the
Understood.
subvention or the interest cost, and that's the beauty of it. Because look at it this way, from a school's perspective, otherwise they would have to follow up with this parent, they would have to send reminders, they will have to
Ah.
play good cop bad cop, a lot of this thing. So our research, Anupam, says that no matter how big and how prestigious the schools are,
Hmm.
there will always be 10% of the parents who will have challenges, who will struggle.
Especially in a
We
year
come
like we've
into
had. Yeah.
absolutely, and we come in to solve for that. Parents love this feature. It was ranked the second most required feature. Obviously the first requirement is my child should get 99 out of 100 or 100 out of 100. But the second feature has been, hey, can you help us with the fees? Can you make it monthly? Can you do all of this? And that's where we
No.
really have been able to add a lot of value to the school, and the school is happy to share this.
Very interesting. Okay, let's move to the second case study. Let's like take it a notch upwards. The upskilling. Okay, actually, let's take it to a master's degree. Let's just say that there is someone who's finished his undergrad, who's now a graduate, and has got, has cleared the very very tough CAT exams for the IIMs, or whichever it is for B schools, and he's actually got that admission letter. And obviously now the next step is, how do I fund this? Because I'm guessing these are what, 25 lakhs for 2 years. I
Yeah.
It's been a long while. I'm
Sure.
not even an MBA, so I don't know what the fee structure is.
Trust me, you're not
Right.
missing much. I am, and you aren't missing much.
Well, I, okay. So what do you do to, with a family like that? What would be the structure? How would that education loan work for a
So
fairly
Anupam,
good
here,
B school? Go on.
yeah. So here the concept will change a bit. As I said that, here you're really looking. So here what we have seen is there are two kind of MBA programs. You're looking at UGC approved, you're looking at the top of the range programs. And even today, I will always recommend that these parents should get loans from the SBIs and the Bank of Barodas of the world. It is definitely uh, sustainable for them because they can absorb a 9.5% NPA as public sector banks. It's
Wow.
also it's something that they can absolutely absorb. uh, and moratoriums are something that are dying a very slow death, but your public sector banks are able to offer them because they're looking at it as a service to the country, right? It's they're not looking at it from a profit motive, right? So over there you will see, and I would also recommend whenever possible, nothing beats an SBI or an HDFC or Bank of Baroda when it comes. That's you can't beat, you can't compete with the government, right?
E-
Um,
Education is also PSL, right? I mean, that's priority sector lending,
yes,
is
yes,
it? Yeah.
priority sector, absolutely, absolutely. So it's in that segment. It's there. They get that, they get that leverage. Uh, there exists a large segment of people who don't have who haven't cracked it, who haven't built, but they still want that master's degree. They still want maybe a 12 lakh rupee program, right? You have brands like NMIMS and SPGen and Alliance. A lot of these really good brands exist who are able to offer of similar value for money. Maybe the placements are not as high, but the fees are also not so high. That's where we've been able to play a role. Over there we come in and say, look, moratorium means you're paying interest from the first year. You're also paying interest on the money that you have paid in your year one. So it's obviously going to be more expensive because this is where banks, your government banks don't operate. Your private banks are out there to make a killing, and they will happily take a collateral from you and they'll give you this loan which is expensive. We operate slightly differently and we come in at a different angle and we say, look, we cannot offer you a moratorium right now, right? What we will, however, do is, sanction a much higher LTV for you. The money will go directly to the university when you start paying us. You do well maybe in your first semester, second semester, we will then be able to, maybe offer longer durations. So for a 2-year program, maybe we'll be able to offer them 5 years of tenure. And that in the long run, that is actually more cheaper because most of the students that we know who have taken loans from moratorium based loans, they complete it, they get into a job, and they pretty much close the loan in 3 or 4 years.
Hmm.
So it's the same with home loans. I'm sure a lot of home loan borrowers, they finish the loan in the first 7-8 years of the. It's the same thing that we're seeing here. So that's where we come in and we are able to add a lot of value there. The interest rates typically, because we are an NBFC, uh, are a notch more than what they would expect in a government. But we do give them better service. We give them absolute transparency. We give them a lot of more flexibility. So those things, I think, makes a lot of difference for the discerning customer.
Sure. So you spoke about how they pay this off in 3 to 4 years. Moving on, with our questions, what happens in case of defaults? It's a logical question. I mean, and especially you spoke
Absolutely.
about how the SBIs and the PSU banks can absorb a 10%. And I had no idea that in that segment NPS can be as high as 10%. I mean, that's really high. But what happens then? What happens in case of
So
defaults?
Anupam,
Probably
that's
you
the
might not
reported
be.
NPA. Yeah, that's the reported NPA. So
Okay.
uh, it is expensive, and again, as I said, for us, we've been lucky over the past 5 years. We've built in very robust processes. We've got a great team. Our NPAs are nowhere near that. Our NPAs are pretty much 0.5% of the book.
Hmm.
So we've done a commendable job, and our book held even during the COVID environment. And there are three reasons why that happens. One, we are focused on segments which are really culturally sensitive, culturally important, and at the same time they're also income generating. So a person who, let's say, wanting to do a finance certificate or a coding certificate can is not going to default on them because he knows at the end of it there's placement. They will struggle a bit, but maybe they'll delay a bit, but they will not default. Similarly, a parent typically doesn't want to default on a school loan. So you start with that. Essentially, the propensity to default is less. That is one.
Hmm.
Second, the money has a very clear end use defined. So it's going directly to the university or the college or the institute, right? So again, that's a control factor. Third, yes, will there be NPS? Absolutely. We are lenders. We are in the business of risk. It's something that we have to accept. We do accept it. But at the same time, because we are an NBFC, we are under the RBI. we have taken a lot of effort, a lot of caution to ensure that every rule is followed, every guideline is followed. We have uh, we have very, very polite, respectful conversations. We try to understand why is there what is it that's causing that. We try to restructure it wherever possible, and that's where we've been. We do have at the end of it, and if they say if you have a 0% NPA, you're just
Hmm.
not taking enough risk, right? So it has to be a very fine balance, and so far we've done well, and that's how we manage our defaults.
Yeah, good to know that. It's just that you feel that education is like your basic degree, whether it's school or whether it's college. Where's the asset there? You can't sell that degree in the open and recover your money as a loan provider. So what do you do out there?
Securitization of education or securitization of services is not possible. See, if you're Bajaj Finance and if you take a TV and you default, they can come and take your TV back, right? They can't really do that with anything with an
Yeah.
experience, right? So yeah, so we've had a very, very strong algorithms. We got decent, very good grasp on the segment. As I said, it's very nuanced. There are a lot of the motivations to buy a TV is very different from the motivation to invest in a course which is going to cost you 75,000 rupees and get you a new skill.
Hmm,
We
hmm,
capture that. We ensure that that motivation remains strong. These guys are able to pay. Obviously, we are not Rambos here to go out and spend money. We
hmm,
want to be conservative. We want to build a solid, robust book. We are here for the next decade, so we want to ensure that as we go ahead, every parent, every person looking to skill up does consider Eduvanz. And that's only going to happen when you treat the ecosystem with the respect it deserves, and you treat the borrower with the respect that she deserves, because at the end of the day, she's doing a course that's going to help her generate better income, and you
hmm.
want to be a part of that journey.
Sure.
So
So, you mentioned about how you generate, I mean, your zero cost loans are structured in a way that I, as a parent, I'm not paying you interest. I'm just paying you 7500 per month or whatever, 10 months. How does your revenue model work then? I mean, you're entirely dependent
sure.
on the school because you're an originator for them, or how does that work?
So let me take the same example. Right at the beginning, when we interact with the school and partner with the school, we ask the school a very simple question. Hey, if this parent were to come and say, I want to pay my entire fees upfront, will you give me some discount? The parents is, and is asking for a legit, upfront discount. And the school says, sure, yeah, I'm happy to give you a 10% discount, right? But pay me 67,500 on day one, right? A lot of schools are able to do this. A lot of schools have very clear cut policies on this. We capture that 10% and we say, look, if you are willing to share that with the parent, or if you had a cost of acquisition from the subvention, let's play that and let's capture that. We will give you the 67,500 and collect 75,000 from the parent over a span of 10 months, and that risk is what we are taking in. Obviously, today that remains the single largest revenue source for us. And as we build this asset quality, as we build this, can we look at more monetization opportunities? Absolutely. Can we cross sell? Absolutely. The sky's the limit. But today, our core focus is to create value for the schools, for our education partners, for our universities, and really become a dependable partner today. So
Hmm,
our revenue today, or our bottom line today, is dependent on one of the partners' ability to bear the interest. And when that doesn't happen, essentially the parent is bearing the interest. Then the interest cost or the interest part goes really to the parent. So if you look at it, it's a loan, right, Anupam?
right, right.
To be very simple, a loan has a principal amount and an interest amount.
Hmm,
Now, the interest amount, there are only two ecosystem players in this, either the college or and the parent. Either the college bears the entire interest, or the parent bears the entire interest, or they can split it in between. So that's the very simplest way to explain that. And I do that with all my university partners. They really seem to understand how it works, and they grasp it very quickly, because otherwise, look at, if they don't do it, the cost of not bearing this is a longer collection
hmm,
cycles,
hmm.
more effort, uh, they as a college cannot really, do anything if the parent says I'm not going to pay. It's just delay, they say, is the deadliest form of denial, right? They're just
Mhm.
delaying. These parents are just delaying the fees, right? So
Yeah.
that's where the college is bearing that brunt.
Okay.
Here it's upfront, it's definite, it's streamlined, it's transparent. So that's where we add that value.
Great. So, last couple of questions as we start wrapping up this episode. First is build a checklist for our listeners. If some of them might be doing this for themselves, for upskilling themselves. Some of them might be parents looking to get a loan for their kids in K-12 or wherever. I don't know. What do you think? What can be a good checklist for them to choose a good education loan provider?
Sure. Very simply put, what they need to check is before even the education provider, right? First check, is the institute a really strong one? What is the motivation for them to do that? And 99% of the motivation comes arises that do they have really good placements or do they have a good outcome? So first look at the outcome. As a checklist, I tell everyone who approaches us that, hey, how do I choose? So first look at what the outcomes are, whether they're going to a college or university or an institute or even an ed tech. What is the outcome, and is there a historical data that backs that proof, that backs that up? Once you're convinced that this course is there, and if the course and if the institute is of value, and if the institute is of a certain pedigree, they would have had an education loan partner. Because as you said, today we live in a world of consume now, pay later, buy
Mhm.
now, pay later. They would have some sort of a benefit. The point too is they should then check, hey, is that offer available on the credit cards or something like that, right? Again, I'm looking at it from the value, of I'm not trying to sell. The concept here is not to sell any of Eduvanz. The concept here is adding value to your listeners. So again, the second thing they need to say is, do they have offers on their cards? Do they have offers that they can leverage? If that is there, take that because that's cheaper for them. And third is, if all this thing is, if it's something that they're really keen on, then they don't have those kind of offers on the cards at that present, just ask them for, hey, do you have an education loan partner? And the most important thing that they should check for an education loan partner is, are they dealing with an NBFC or not? I cannot
Mhm.
stress this enough. The markets today comprise so many what we call imposters. You
Yeah.
have a lot of platforms who are not NBFCs. You have a lot of aggregators who are just going to take your details and try to sell it to a bank and try to get it for you. You want to ensure that your education loan partner is an RBI approved partner, right? That's the
And
most important. Yeah,
typically on the website in the about us page, you would have it there, right? That we are a registered.
absolutely,
That's the way to look out
absolutely.
for it, right? Because
Every
not
NBFC, yeah,
not everybody would be savvy enough to go to the RBI site
correct.
and look. RBI site is one more. It's a massive site. So the way to do that
Yes, to
was
put it mildly,
probably, yeah. The way to do it would be to go into the about us section of the loan provider and see whether he's got that registration number written out there, or if he's talking to
right?
someone from the who represents himself or herself from the education loan provider, to ask them upfront, ki, bhai, are you an
Correct.
RBI certified or RBI
Absolutely.
registered or RBI licensed NBFC, right?
Absolutely.
Sure.
That's one. And the second is, ask the college that can they get, access, or can they talk to alumni who have taken the education loan from that provider? Because that's very important to know that, you're dealing with a partner who is a responsible, authorized, has the right licenses, is able to deliver on the promise. The worst thing that can happen is, your data is misplaced, your data is abused, you don't get the loan, you're stuck there, and you lose your seat. You don't want to do any of that. So you want to have a guy who is responsible, mature, brings a lot of experience to the table, and is certified or has the right licenses. So those would be my
Very interesting.
suggestion to your listeners.
I had no idea about the aggregating part, yeah, because I've done a few episodes with digital lending, which is more of your stuff like payday loans and the
Mhm.
more, this entire Chinese app scam and
Yeah,
whatever happened out there. But I didn't know
yeah.
it's prevalent in education also. Are you serious?
Yeah, yeah, because they for them it's very simple. They will do whatever it wants, right? They can do wherever. There's these are cowboys who are, waiting to get caught, right? So you it's a buyer be aware kind of a situation. You need to ensure that uh, what you're taking, what service you're taking, are you taking it from a guy who knows, and you don't want to share data unnecessarily. So that's very important. And yes, the market is filled with aggregators, the market is filled with people who will promise the moon. So
Unfortunate, really unfortunate. It was something like, there's a difference between buying a fridge on an EMI and funding your kids' education on an EMI, and it would be really tragic if people are not cautious enough, like you said, buyers beware. So, folks, I hope you heard that part. Just to repeat it, please check out who your loan provider is. Raheel just gave a few pointers to you out there. See if the loan provider is registered with the RBI. Speak to your education provider, the college or the school that you're going in. See if you can get to talk with the alumni out there who've taken loans from this education loan provider and get a better idea. Raheel, have I captured that properly?
absolutely.
Okay. And in fact, my last question, if our listeners want to know more about this, how can they reach out to you? Where can they know more about this?
Absolutely, very simple. We are on eduvanz.com. We have a Play Store app on Google Play Store, and they can reach out to us. They can reach out at support@eduvanz.com or contact@eduvanz.com and drop us a message. We are always available. They can get a call back within a day, and happy to support them in their journeys as they power their careers.
Sure, great. Let's wrap on that very positive note. And I guess you would be on social media in case anybody wants to reach out to you
Absolutely.
directly on the
Yep.
LinkedIn's and Twitters and everywhere. Okay,
Absolutely.
folks. So that is a wrap. That's a wrap on this episode of Paisa Vaisa. Really, it's so good to have an education loan provider here on my show. My guest Raheel Shah, co-founder and chief business officer at Eduvanz. Raheel, thank you so much for doing this for our listeners. Really.
My pleasure, Anupam. Thank you so much for having me.
Sure. Thank you. And listeners, if you like this podcast, don't forget to check out other interesting podcasts on the IVM network. You can listen to us on the IVM Podcast app or ivmpodcast.com. You can also follow us on our social media. We are IVM Podcast on Twitter and Instagram. If you want to reach out to me, I'm your host, Anupam Gupta, B50 on Twitter. And thank you so much for listening to this episode of Paisa Vaisa.